How we can improve the performance? So technically, if you are looking for intraday, we use this setup. One is 50-day, 200-day, and pivot points. And also we added the CPR recently. And then we are using this MACD, MACD. So now let us try to understand these indicators. So why MACD? Because this is called as momentum index. If it is trading above this zero line, right, there will be a lot of buying momentum. So if it falls, there will be a lot of buyers who will be buying the dip. But if it's trading below the zero line, there will be selling momentum. Means any rise in the market, there will be sell off in the market. So you need to see the overall picture. What is the maximum level it has gone when there was a selling? What is the maximum level it has gone when there was buying? You need to know this in 1 hour time frame or maybe in daily time frame to get an idea about what can be the maximum momentum this index can have, right? So you can see here for Bank Nifty, if I go for 1 hour time frame, the maximum high momentum was close to around 500. You can see it's close to in the range of 450 to 500. On the downside, it's you can see on the on the day of January there was some sell off. It went up to 700, 600 also, but we can assume it's close to 400. You can see, you can go back and see it's in the range of 400 to 450. So what we can conclude here is that if the momentum is around 400 and 500, it is called as overbought zone where we can see some reversal. And if it is below 400, we can see some short covering rally, right? It is oversold level. So you can apply the same logic even for intraday. So you can see if you go for 15 minutes for intraday. So basically you can see the MACD here. It is trading above 100 and it's around 100. So it is a bullish momentum what we're seeing in the morning session. And also it is trading above the red line. That means there is a lot of buying pressure. So we can guess that there is still a momentum which is being left in this particular index because it is not at the oversold level or it is not at the overbought level. So it is almost the starting of the trend. It's around 100. So 100 to 50. This is like usually the momentum will start with this particular indicator. So this is giving an indication that you can see there is a histogram. So usually how it works is you can see. So it moves in cycle. Once the buying momentum starts, it get increases and then we can see some consolidation. But if this has not broken the zero line, right, then you can see the market was breaking the day high. Means it was breaking the day high around 12 o'clock. So that means there was a strong buying momentum. Even if there is sellers who are trying to pull the market or there are people who are trying to book the profit, there was a strong buying momentum which resulted in trending day. So there are 2 points what you can take out from this indicator. One is that if this histogram is not breaking the zero line, then we can consider that day is going to be trending day where we can see one-sided move because there is no such heavy selling in the market and market usually trends in one direction. That is the first thing. And second is this black color line was not breaking the red color line. So that is also confirmation that it's going to be a trending day. So let us take some more examples to understand it clearly. So you can see in the next day, which is 5th of January. So you can see it was a buying momentum day. The market was uptrending. You can see unless it has broken this level, you need to hold this because it was a trending day. You can see here also did not broke the zero line. So that is where you can look for exiting the strategy. So you captured this entire momentum. So the main advantage of this particular momentum indicator is that we will be getting to know at what level we need to exit or cut our position. The another indicator what we use is the CPR. CPR is also a very good indicator. There are different kinds of CPR. Usually there are different strategies which is related to CPR. But we go with a simple concept. If it is wide, it is wide CPR. If it is narrow, it's a narrow CPR. How narrow it is, how wide it is, we have to just make an assumption. So usually how we can make an assumption is you can go back and see which was the widest CPR, which was the narrowest CPR, right? So based on that, you can assume which is wide and which is narrow. So let's start with the 3rd of January. We can assume it's like a moderate narrow CPR. So what is the reason of using CPR is you can see this particular level of Bank Nifty. So Bank Nifty opened, you can see whenever the market opens at around 9:15, you'll be having 1 or 2 candles. That is where you get the CPR levels. It will be generated automatically. It will be there for the whole day. So what advantage we can get with this indicator is that if the CPR has opened higher, you can see from the previous day, it has opened higher. I'll be giving you a simple concept. There are so many strategies which is available, but we just go with a simple concept that if the CPR is opened higher from the previous day, then the market is trading above that particular level. The market usually trends in one particular direction if it is a narrow CPR, right? If there is a gap here, let's assume that the market opened here, right? Then the market will try to fall. This is the simple concept. CPR is like a neutral, it's just like a magnet. It will try to pull the market if it goes away from that level. Because the market opened near to the CPR, it was a trending day because it has took a strong support here, and there was no much gap here from the previous day. So let's make it simple. If it is open, if the open was higher from the previous day, it's going to be like usually trending day, and it was a narrow CPR, so it was a confirmation that there will be a lot of buying momentum. So next, let's take an example on 4th of January. So 4th of January, you can see the CPR was wide, right? It was narrow here, it was wide here. So what is the meaning of wide CPR? So wide CPR means the market will be almost flat. Even if it goes upside 100 points, if downside 100 points, it will almost try to close into the same level where it has opened. Because you can see, if you do a comparison for last couple of days, you can see this was one of the widest CPR, right? We can assume this is a wide CPR, and in those days you can see the market opened around 35,600 and it closed approximately 50 points or 100 points from that range. The next day you can see the CPR size was slightly narrow from the previous day, so it's considered as a narrow CPR. The market was trending in one direction. It may trend in upside or downside, but as I told, the condition here is if the CPR is higher than the previous day CPR, it's going to be bullish. If it is below that level, it's going to be bearish. There are two conditions what you need to watch. One is at what level it is opening, whether there is a gap up or whether it's wide or narrow. So you can see in this day, here we have a gap here on 6th of January. So what happened is the CPR was wide and it opened higher than the previous day. So in those days, like as I told that we had a gap. Usually on the gap days, you need to be cautious because what we saw is that the market opened below this particular CPR. Even though the CPR opening range was higher than the previous level, it opened below this level. So that was a conviction that the market will definitely go to the CPR level and it will try to fill this particular gap. And also it was a wide CPR, so it was almost flat. You can see the starting and closing was almost same. You need to see the starting and closing. You can see started around this level, closed around the same level, right? Approximately the same level. So one is we learned about the MACD and we have learned about the CPR. These two indicators has its own purpose. CPR having its purpose about identifying the range. The MACD is identifying about the momentum, whether the momentum will go in one direction for the whole day or will it stop in between. So that is for entry and exit, and the CPR is for defining the range of the market. So now let us try to understand the another indicator, which is called as the moving averages. Moving averages also plays a very important role. We use 50. The reason why we use the moving averages is because we look at the overall picture. Usually the market goes in cycles. Market cannot be trending in one direction, right? It goes in cycles. If the market trends, it will trend for at least 2-3 days, and if it falls, then it falls for 2-3 days, right? So why we need to use the moving averages? Because we need to identify where is the consolidation zone. And let's say you can see in the moving averages we are using 50-day and 200-day. If it breaks this level, it's going to be a bearish trend. It will continue for 3 or 4 days. So you are getting the projection for next week by looking at moving averages, because you're using 50-day, which is for 3 months. 3 months data. This is average of 3 months. 50 days is 3 months, and 200-day is for the whole year. So I hope you're able to understand the technical concepts about these parameters which I told, and we'll be discussing more about this because I cannot share only in one session. We'll be taking some more examples, and we understood about technical concepts. As I told that there are 5 skills. So open interest is also very essential. You need to look at impact of change in OI. You need to know what is historical OI buildup, and you need to identify the momentum. And FI data, futures, and global market, yes, you need to have a view. Let's say if there is any event in the global market, definitely there will be an impact in the market, but these are all you will be getting in through experiences and all. So thank you everyone. It was a good session, and also thank you for sharing your feedback. And also in the meanwhile, we'll be sharing you the PDF on the parameters what we discussed, and whatever we discussed for today. Like these are all the parameters which will be sharing you the PDF in the Telegram channel. And for those who are newly joined into the algo community, Please do open your Demat account, and also please do join this group. We have sent an email for you to join our Telegram group. We have this group which is called as Trade Psychology Algo Trading, where we have 60 plus people now, and we are sharing this each and everything in this group. And recently we released also the video for installing the software. For those who are open the account, here is a link. You can just go through this video. It's a simple procedure. You can download the software and install the software for options algo. And if you're someone who is want to join, you can just go to this link. As you know that we have two different level of membership, what we are providing, silver and gold level of membership. What is actually this silver and gold is, you can see here, like as we design this training program in such a way that let's say in silver level, it's like an entry level. We'll be discussing about the weekly strategies, the concepts, and the strategies. And also we had given algo for the silver members in our community. The gold level is little more like advanced level, where we go into the detailed concepts about the adjustments. We go in detail about the community discussions. We have some people in our community, they are trading the long-term strategies, they are trading the monthly options, they are doing adjustments, and you need some capital. You need to have 3 to 5 lakh rupees capital for the gold membership. And if you have let's say if you are interested, or if you are willing to upgrade, we give the discount of the members who are silver members for you to upgrade. And also you get this all the concepts we discussed about, the advanced concepts on options adjustments. We also discussed about intraday with this kind of setups what we have, right? So these are the two membership. And because a lot of people ask about what exactly is this, and this is how actually this training program is designed. In the meanwhile, if you got any questions, please do feel free to ask, and we'll be definitely guiding you. And we do have different groups here, like we have monthly, like this is how we'll be trading the stock option strategies for the monthly options in the coming days. And we'll be sharing the adjustments and what are the kind of capital required. So usually we recommend you need to have 3 lakh rupees for the gold members if you want to trade monthly, because we'll be doing a lot of adjustments in between, right? So yeah, so this is about it in today's session. And thank you everyone for your time. And also thank you Ankush, Raghavendra, and for all those people who are attending this live session. And please do share your feedback. What was your learning for today's session about what we discussed for today? And also you can focus on these skills, which is very essential for you to get started, to be profitable. And going forward, we'll be sharing you a lot of insights. We'll be conducting live demos, and also we'll be conducting a lot of things in this training program. And also we are sharing these learnings, especially you can see that in last couple of months we discussed about investing in stocks, right? We discussed about this in the weekly session. Please do stay in touch with our YouTube channel, because some concepts will be essential. If you're someone who has invested into the stock, you could able to capture the momentum what we saw in the, you can see the Nifty rallied in the last couple of days, because we expected there could be momentum, and how to look for investing. And also we discussed about how to look at sectors. There are a lot of things what we're discussing in the YouTube channel also. Like you can also look at some of the concepts about algo, you can do follow in our YouTube channel. Thank you everyone, and thank you for your time. And please do share your feedback. What was your learning? And thank you. We'll meet you soon, and we'll be providing the recording for those who have missed this session. Thank you. Good night. We'll meet you soon in the upcoming session strategy. And thank you for watching this video. And please do check out the links in descriptions to know more about this product.